For more on all of that, we're joined now by Stan Shamu, IG market strategist from Melbourne. Stan, great to see you there. Yeah, what was behind these steep losses on Wall Street, do you think?
Morning, Brady. I think it's just still a continuation of that reaction from the jobs numbers from Friday. Of course, that's just throwing into the mix a bit of uncertainty on the tapering front. And I think that the main thing that investors sort of wanted to see was a situation whereby, look, we are going to go through tapering. It's almost a certainty now. But we do need to see US economic data continue to back up the notion that the US economy has really dug itself out of a hole, and it's really on the in the right direction now. But of course, with the current mix of economic data out of the US, I think the skepticism has really ramped up. Of course, we've got as well the US reporting or earnings season coming up with some fairly big or hefty companies reporting this week, including Goldman Sachs, JP Morgan, Bank of America. And of course, these are always companies that are significant for the US economy and of course about forecasts going forward. So I think investors are just taking a bit of caution after equities, particularly in the US, had a fairly big run over a fairly long period of time now, just trading at record highs throughout December. Now, of course, we also have the US dollar coming off with, of course, those comments from Fed members not really making too much of a difference in investor opinion about the US dollar. Of course, treasuries have continued to rally as well. We had Atlanta Fed President Dennis Lockhart on the wires overnight as well, just saying that he would really discount that 1 month worth of disappointing payrolls reading. And he does really feel that the US economy is on stronger ground at the moment, and he would be firmly in support of further cuts in the quantitative easing program. So there's definitely a bit of a swing towards Fed members wanting QE to be wound back rapidly over the next few months. So I think investors do expect this to happen even this month as well now, although the market's not firmly pricing it in that way. But I think investors just think that there's a fairly slim chance that we'll get tapering this month. But of course, with the data not really supporting this notion, then it's not really enough to see equities continue their run in the short term.
We know Asian markets obviously crucial for our market. Japan was on holidays yesterday, reopens today. What are you expecting to see?
Yeah, of course, we can't really discount the moves in the FX space. I think they will be the primary drivers of price action in Asia as well. Of course, the dominant theme at the moment is US dollar weakness. Now, the impact this has had on the US dollar versus the yen pair has been quite drastic. We've seen a rapid pullback from those highs that we saw earlier in the month. Of course, now the dollar yen's traded below 103. I think it's currently sidelined at about 102.90. So this will definitely be pretty detrimental to Japanese equities today. Of course, they were closed yesterday for that coming of age day holiday, and I think from Friday's close, now we're actually calling the Nikkei down 3% just due to that strengthening Japanese yen. And of course, this will see the Nikkei trade at about 15,420 at the open. So it's really looking like it'll be a tough day for Japan. And of course, this sentiment might extend to the rest of the region as we just see that first reaction to that payrolls number from Friday by Japanese investors. And of course, there is a little bit of data out of Japan today, but we don't really expect that to make too much of a difference. We've got that current account data coming through at 10 to 11. But I think all things considered, I think a lot of analysts still expect the yen to continue its weakness in the medium term. We've heard numerous reports from Japan suggesting that they are ready to act if need be, and there is a strong camp feeling that Japan or the BOJ will spring to action at some point this year and really help weaken that yen, and of course help this economic recovery in Japan stay on track. So perhaps on that notion, buying those dips in the dollar yen and of course the Nikkei might be warranted, but of course in the short term it seems like they might see a little bit of weakness.
So what does all of that mean for our market at the open? What's your opening call?
Yeah, we're probably going to mirror some of the losses we saw in the US. We're currently calling the market down 0.9%. To about 52.40, so that's really looking like a fairly sharp drop for the Australian market at the open, and that closed below 5,300 yesterday at for the Australian market was really detrimental, and it really put a dent in investor confidence about the local market in the short term. Of course, the rally in the Aussie dollar against the greenback hasn't really helped sentiment at all. We've got the Aussie back towards the mid-December highs against the greenback, and that's really not good for the local market, where I think investors were starting to get a bit happier about the Aussie dollar trading below 90 against the greenback. But of course, we'll have to look towards perhaps the materials names for a bit of some bright spots today. Whilst equities struggled across the board, I think that US dollar weakness really did help a lot of the commodities. We actually saw some fairly good gains. The likes of nickel was up 2.5%, natural gas well over 4%. Of course, the precious metals, gold and silver, maintained their run as well, putting on some good gains. And even iron ore broke its losing streak and actually managed to post a gain for a change. So with that considered, I think that the materials space might lead the way today. So just look out for gains in that space. Precious mining actually climbed over 6% in Toronto, and I think that's on the back of a positive trading update as well. So we might see its local listed stock mirror the sort of similar gains today. But apart from that, I think the market will be fairly defensive. Of course, when there's a lot of uncertainty, we'll probably see some of the yield plays continue to benefit in the short term. But yeah, just look out for some continuation of gains in the materials space, particularly the nickel plays, where of course that Indonesia export ban on raw ore has really helped nickel prices push high in the short term.
Thank you so much for that. Stan Shamu there from IG.
Cheers.
And coming up on First Business, with the stocks to be watching at the open.